Tax Act. But now that, so I was asking myself, so now that everything is now under Nigerian Tax Act, so what does that mean in exams? Well, for me, I would say what it means is that when you mention the Nigerian Tax Act 25, then you mention all those taxes, those tax acts that are under it, so that for academic purposes, so that you can get your scores on point. And it's good that we also have students in this webinar. So I just thought of quickly sharing that. So in respect to the Nigerian Tax Administration Act 2025, the NTAA. So this is actually, when administration is just all about, train, letting us know how we should do things, how the taxes are going to be collected, the assessment is going to be of that. So and then of course enforcement, because if they are unable to assess you, there is going to be an enforcement. If they are unable to also collect the taxes that is due to the government, definitely there's also going to be an arm of enforcement. So it is this act that will be responsible for all that. So everything is intertwined. All of these acts are intertwined and they work together. However, there is I know there is one there is one major news that has been going round and round. It is in respect to individuals. The government generate tax identity number for individuals using their NIN and the likes, and also for companies using their CAC and all. So how is the government going to achieve this? To be very honest with you, we are all still looking. We are still watching. We are observing. But one way I think, one of the smart way I think the government is going to want to apply, because I don't expect that a 60-year-old man that a retiree we just go and generate a tax ID for him if he has not really worked in a structured environment that could have ensured that he or she has a tax identification number before retiring. But what do I think the government is going to do is to try as much as possible to bring a lot of business owners under the tax umbrella. So under the tax net, you try to bring, for example, now the moment you bring in you bring in a business owner, whether is the ordinary business registration or CAC, limited liability, definitely the moment your company having a tax identification number and you yourself a tax identification. So in the past, we have instances whereby business owners don't even have tax identification number. So now that those kind of lapses will not be will be taken care of. So I believe with this, we'll have more individuals that will be under the tax umbrella. So this is one way I strongly believe that the government is going to look into. But whether they will start and down all of that, I don't see that happening. But however, 2026 is here. We will see what it's going to look like. But it's not something we should now be worried, because I already heard for some people say, "Oh, I will not keep my money in the bank. I will not keep my money in the." So we don't need all of that. So as long as we do what we need to do, business. However, let me put a lot of benefits enjoy in registering your business and in also allowing your business account to do your business dealing. Okay, maybe I'm going general now, but I just feel like I should please say this, because oftentimes we always see many, because especially many business owners, because they don't want to pay tax, they will divert the money that is meant to go to their business account, they divert it into their personal account, so that when government officials come and they are not seeing anything in the bank account, they will just say, okay, fine. Now, if you look at it now, there is really nothing to hide. looking at tax reliefs and exemptions that businesses will tend to enjoy. Right? When we get the wheels. So quickly, let's go to the. So we are going to really talk about the different tax acts that there are a lot of changes to. So the first, which I know a lot of us will be very interested in, both HR, accountants, business owners, and the likes, is the personal income tax. So how does it affect us? Like this is where your payee comes in. How do you calculate your payee? Formally, to understand the new tax band, you need to first understand what the old tax band was all about. So in the previous tax band, we have these tax rates. The first 300,000 of your taxable income. Your taxable income is different from your gross income. Your taxable income is your gross income less all reliefs. So I'm talking now under the old tax band. Okay, let me quickly go this part. So can we all see my screen here?
Yes, I can see your screen. If you can see the screen, also indicate in the chat that you can see, or if you can't see, let us know. But I can see your screen.
Okay.
Well,
so
for me, I
just
can't see your screen anymore.
All right, thank you. So according to the old rates, look at your gross income here. Your gross income, we're using this first example to my left, the 4 million. Your gross income, so less all reliefs. All reliefs, there is something we call consolidated reliefs. Back then, the reason I'm using back then is because all these consolidated reliefs end December 31st, 2025. In 2026, we'll look at what we'll have as reliefs. Now, back then we have something we call consolidated relief, CRA. We have CRA 1, CRA 2, and CRA 2. The CRA 1 is what we call the higher of 200,000 naira or 1% of your gross income. So if 1% of, for example, looking at this one now, if 1% of 4 million is 40,000 naira. So which one is higher between 200,000 and 40,000? It is definitely 200,000. So so when calculating such person's payroll, you use 200,000. Then you add it to a fixed 20% of the gross income of that employee or of that individual. So 20% of this 4 million is already 800,000. So adding this already is 1 million. Now, other reliefs are your national housing funds, your health insurance scheme, pension, and all of that. They are all reliefs. They are not taxable. So if your company, if a business owner is paying pension for a staff, and maybe the business owner wants to contribute everything, nothing will come here for pension because the business owner is contributing. But if an employee will be contributing out of his salary, that amount the employee will be contributing will be deducted. It will not be taxable. Your contribution to NHIS will not be charged on tax. So it will not be charged on tax. You deduct it from your gross income. So it is what is left. That's what we call taxable income. When you have deducted all your pension, your national housing fund, your NHIS, and all of that, and the consolidated relief allowance. Now, the pension, the NHF, the NHIS, everything are still going to be deductible. Your pension. So looking at this sheet here, your pension, your NHIS, that's National Health Insurance Scheme, your National Housing Funds, those three. Let me first stop at those three. All those three, they are in existence in 2025. They will still be in existence in 2026. Now, the question is, what of the CRA? The CRA is existence. The CRA 1 and 2 is in existence in 2025. but will not be existing in 2026. So the question is something that should have helped us to reduce our tax. That should have helped us to reduce what this tax ban will be charged on has been taken away. So what is that a good news or a bad news? Now let's examine if it is a good news or bad news. So what will be replacing the CRA 1 and 2 is what we call the rent relief. The rent relief is your 20% of your annual rent. Definitely, let me just say this: if you rent an apartment for your parents, you rent apartment for your wife somewhere, you rent apartment, you have 3, 4, 7 rents you are paying. It is only one that the government is going to recognize and going to provide receipts. Actually, I still don't know how the government intends to make this work. Why? Because it is the lower of 20% of your annual rent or 500 or 500,000, which means that if your rent is up to, like, let's say 2.5 million, the 20% of that is 500,000. So you can claim a whole 500,000. But if it's not up to 2.5, any amount that you are getting, it could be 10,000, it could be 100,000, it could be 200,000. So the government is going to choose. So the law now is saying for 2026 is saying that the government is going to choose the lower one. So the government is going to choose the lower one, not 500,000. So there's no free 500,000 anymore. However, if you are also staying in a house that you are not paying rent, that means that this relief allowance is not for you. If you own your house, this relief is not for you. However, if your house, maybe let's say you are paying interest on, you purchase it on loan and you are paying interest on, okay, you can get some form of relief on the interest on loan. Excuse me, I mean,
No problem. If you're enjoying the session so far, I'm guessing that you're already having questions in your mind. You can start noting your questions down. When it's done with the session, you drop the question so that we don't miss them. Drop the section in the question and answer section or in the chat. A couple of things that you have said that are very, very important to note. You get a couple of reliefs when you are calculating your tax. Then, I think one of the very first things you mentioned earlier about FIRS and the new change that comes to mind or that sticks to mind is that FIRS was only responsible for tax revenue for the government, but now they are responsible for both tax and non-tax revenue. So we should keep that in mind, especially people that either work around that sector or are interested in publishing papers around that sector. Then for students, I think he has tried to help us understand that when they ask you questions related to different types of taxes available in Nigeria, for now it's just safe to mention all the different tax and then mention the different tax acts that used to exist prior to the enactment of this law, and you can also include this one so that you get your full points. In the course of the session, so people join from other parts of the country. We have felicitors from Edo State. We also have Ulewe. We have Mr. Barrister PT from Suleja, Niger State. So we actually have people from all over the country joining us. I'm already getting people our time at the moment. Mr. Victor, are you back?
Yes, I'm back. Sorry about that. I'm having like almost 3 engagements. I thought I will be having by around 2, not knowing that the timing was already scheduled to 1. So quickly, okay, I was talking about these tax reliefs, and so in 2026 there will be nothing like CRA, nothing like consolidated relief allowance anymore, but we'll be having rent relief allowance. So I think I already said a lot about the rent relief. So I decided to do a comparison between the the old tax rate and the new tax rate. Okay, so if your gross income for the year is 4 million naira, you multiply your monthly multiply by 12. That's how you get your annual gross income. If your annual gross income for the year is 4 million naira using the old tax rate and using the new tax rate, your annual income is 4 million naira using the new tax rate. What will you take home? In using the old tax rate, you will take home 3.4 million. But using the new tax rate, you will take home 3.5 million. So which means that in the old tax rate, you pay more on tax, on payee, while using the new tax rate, you pay lesser. So I decided to give us this free view of the computation, using the old tax rate and the new tax rate. So the new tax rate, the relief that everyone tends to enjoy is, oh goodness. Hey, don't enter. I'm busy. All right. Sorry about that. The tax relief everybody will enjoy in 2026 is 800,000 naira. So that one is constant, and then the subsequent tax band, the tax rate, because the essence of that is because the first tax rate is 0%. So the next one is 15%, and it's enjoyable up to 3 million naira. And that 3 million naira, it means 2.2 million. Although this one is going deep into the computation, we might not really need that. Your accountant or consultant will, if they were calculating the old one correctly, definitely they will know how to just calculate this new one. And I'm sure Salario has been doing that for us, and they will be able to do that. They will be able to do better, and I'm sure Salary also has capacity to do more for 2026. That's why they are here. So, but in order not to bore us with the computation, the calculation, I've just done all of that for us so that we can see it live and see, okay, they've been saying that you pay less tax. Is it true? Yes. So using the old tax rate of a gross income of 4 million, the tax you'll be paying will be 518,000 naira in the whole course of the year. But using the new rate, all you have to pay is 456,000 naira. So I think that still makes sense. And I know that's one of the things that people really want to see. All the English that this relief, all of that, you won't do this, you won't do that. It's all about how does it affect my bank account, or how does it? So that's what everybody is interested in. So I decided to go further to also elaborate on the tax rate, both the new and the old. So if you are using the old tax rate, if you are earning 20 million naira in a year, that's like 1.6 million per month. That is if your gross income is like 1.6 million per month. That's like 20 million in a year. Will it affect you? Will it make you pay more tax? So looking at the board, using the old tax rate. Please note that for the purpose of this webinar, we didn't consider other deductions. When I say other deductions, other reliefs like pension, the housing, the insurance, we didn't consider that. Let us see what we are dealing with in respect to the tax, the new tax and the old tax. So, for example, looking at this one, the first example here I have with me, using 20 million using the old rate. If you are earning 20 million, on the norms, the 1% of your 20 million is 200,000. So 200,000 versus 200,000, it is still 200,000. So you pick 200,000. Your 20% of your, I'm on the old rate now, the 20% of your gross income is 4 million. You're already getting a big relief of 4.2 million. So what is taxable is 15.8 million. So if you have pensions, NHF, it will bring down that 15.8 million. It will bring it lower. But let's ignore that first. Now, looking at okay, maybe I should explain this, because sometimes I've had friends, colleagues who will call me and say, okay, my salary is so amount. What should be my tax? I used to say that tax is not just what you just carry calculator and say, okay, you apply percentage. No, it requires some calculations. However, this new tax, it makes it easier, and I will get there. It makes it easier to calculate. Now, here, this tax band for the old rate, what it means is that it's out of this 15.8 million. It means the first 300,000 of that 15.8 million. So multiply. So if your first 300,000 multiply by 7%, you will get 21,000. The next 300,000 from that 15.8. So you already have 600,000 like that. So the next 500,000 multiplied by 15%, you'll get 75,000. The next 500,000, by the time you have done 300, if you are having 15.8, by the time you have done the 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, by the time you've done the first 5, you already have 3.2 million that you have calculated your tax band on. So the question is, what do you have left? So if you do 15.8 million minus 3.2 million, what you have left is 12.6 million. So it is that 12.6 million you are calculating 24% on. And then the total pay you will be paying here is 3,584,000. However, if you use the new tax rate, let's assume that your rent is, looking at the one in the middle, let's assume that your rent is 2.5 million naira. So let's assume that your rent is 2.5 million naira. That means you will be able to, and you can prove it that yes, your rent is 2.5 million naira. Then you enjoy up to 500,000 naira rent relief. So what that means is that you'll be left, by the time you deduct the relief from your gross income, what will you be left with is 19.5 million. Now, if you are to start using this tax band, the new tax band, the tax rates, if you use this on the 19.5 million, what you will have at the end of the day will be your take-home salary will be 16,445,000 naira, which is higher than the old tax rates, meaning that you will be paying lesser pay. However, let's assume if you are earning 20 million, let's assume you own your house, you are not paying rent and all of that. That means no relief allowance for you. The only relief allowance you can claim is the first 800,000 of that 20 million. So which is going to be nil. So no tax on that first 800,000. But looking at it, by the time you apply the next 2.2 million, that takes your money to 3 million, and you'll be multiplying that by 15%. You have 330 and all of that. So quickly looking at that down here, it will affect, if you don't have any rent, it will affect your take-home salary. Your take-home salary compared to the old tax rate will be lower because you'll be paying more tax. So according to the calculation so far, if you are earning 20 million below, less than 20 million below, you will be paying less, paying less tax. However, if you are earning higher than from 20 million and above, you will pay more, you'll be contributing more to the government in respect to tax. So right from time, we all know that the Nigerian tax system is on progressive rate, rate, in the sense that the more you earn, the more your salary the more your tax contribution to the government. So that is the major thing about this personal income tax. It is not as cumbersome or grievous as we think it is. It's very straightforward actually. In fact, the new tax rate is much more straightforward than it. So I guess the people who are going to really complain more are people the range of 20 million and above that are going to feel the burden more than before. So other things that we need to look at in this tax reform is I already talked about these allowable deductions and release for individuals. It's already part of the things I've explained with the computation. So it makes it more easier. However, the pensions and gratuities, before, the major thing to take home from here is just the compensation for loss of employment up to 50 million. What the government is saying is that before loss of employment, loss of employment is simply that payment that the company used to pay its employees for telling you to, oh, sorry, we don't need you anymore, this and that, or all those English now. HR people, they know what the English they used to use. So before, up to 10 million naira is not subject to tax. But now the government is increasing that threshold to 50 million naira. So up to 50 million will not be taxable. But the moment it is 51 million, that extra 1 million will be taxable. That's just what the new reform is saying. And then let me check. I hope no question. Okay. Then for the capital gain tax, government has also realized that many people use their individual account to do a whole lot of trading and all of that. So here, the gains you make on your capital investments. Now, the ones that are exempted here are the sales of an owner-occupied house. If you want to sell your house, the government will not tax you on that, no matter the amount you want to sell it. So sales of up to 2 private vehicles per year, government is not going to. So the government is not going to tax you on that. But the moment the government is seeing to your account 5, then the government wants to believe that it is no longer sale of your personal vehicles. It is now a business. So unless you can prove it beyond reasonable doubt. However, for private vehicles that you sell within 1 year, it is not taxable. Any gain you make from that transaction, it is not taxable. Now, gains on your shares below 150 million per year, or gains of up to gains of up to 10 million naira. That's this one in terms of the profit. If the worth of your shares is like 150 million, you will not suffer tax. Or if the profit you are getting from it is like 10 million for whatever you invested, it will not suffer tax. Any amount exceeding this threshold is what will suffer tax. And we talk about pension, charities, religious institutions, all those ones, they are not going to suffer tax. So that will be all on personal income tax. I don't know if Mr. Michel, should we take questions here or we should complete the whole session?
Yeah, maybe we could check one or two questions then before we can proceed.
Okay.
So there are questions already. A couple, about 4 or 5 questions I was able to note in the question and answer tab. So somebody is asking, Mr. Akim Muftau is asking, how will the government or how will the tax authorities be able to differentiate between a house owner and someone that rents an apartment? Like, what do you think would be, so for people that are renting apartments or people that own houses, how would they be able to either claim the, so would wait for them properly? Can somebody bring a fake receipt and say that he paid rent if he doesn't pay rent? And how would they verify even original receipts and location? Should I ask other questions or do you want to answer that one first?
Please, can you ask that question again? Is it the question or this Q&A section that you are reading?
Yes, there are about 4 questions there. One from Mr. Akim Muftau. There's one from Abdullahi Idris.
Okay, let's take it one by one.
Okay, so Mr. Akim Muftau is asking how tax authorities will be able to differentiate between a house owner and a tenant, especially for those that want to claim the rent relief.
Okay, I think that was even the easiest. For me now, my rent, I'll just go and present it to my HR or to my accountants, and this is my rent receipt for so period as evidence, and then that's all. So the problem is between the company and the government. So, but the thing now is that for you to be able to present anything, it must come with receipt. It's not I beg, I used to pay so this thing. There must be a receipt, a documented receipt that is presentable, because part of this receipt, part of all these things are what the company is going to use as an evidence during tax audit exercise. So if you are not presenting that to your company, the company will not be able to calculate any this rent relief for you. So that's on one. That's for a tenant. But for a business owner, you don't have any relief. There's no relief for you.
What?
As in, there is no rent relief for a house owner.
Okay, house owners. Okay. No problem.
Unless maybe they borrowed money to buy the house, and the interest, I mentioned that earlier, the interest on that loan, yes, then there will be a further calculation on it. However, the new tax law is not really clear on how that calculation will be done yet. We are still looking out for more updates on that.
Okay, no problem.
So just to add there, I think the person also have to show an evidence as well that they actually took a loan and they are paying an interest on that particular property. So I think you still tied to evidence as well.
Yes, that's also possible. Looking at mortgage loans and all of those things, and the evidence of those loans that they actually took to or change that. Yeah, it's possible. Yes.
Mm.
Okay.
I can see I can see Barrister BT Gaskia. I'm sorry if I am not pronouncing that well. You know, he mentioned something that is catching my attention. He says, "What comes to my mind when tax reform is mentioned in the innovative process and procedures for the payment of tax and its compulsory nature." Well, I want to believe that. Well, is it really a reform as Nigerians are not used to it?
No. I think what the barrister is trying to emphasize is that it's an actual reform,
Looking
and
at this, looking at this question, one of the reforms is about. In fact, there was one of the things under the Nigerian Tax Administration Act. One of the things that the government is intending to do in respect to VAT is to digitalize the process. Now, the process of the invoice, from experience, I know Lagos State government in respect to consumption tax, they were trying to install a chip on people's software, on company software, especially for anyone, hotels, lounges and bars and all of that, you know, so that it can read your sales, and automatically they can know what your consumption tax value is meant to be. I don't know how the federal government intends to achieve that, but looking at all these reforms, the federal government is trying to to work hand in hand with state governments so that they can all achieve more together. So it's possible that they can take the initiative of the Lagos State government in that regard, or I don't know what they have in mind, but if Nigeria as a whole, let me put it that way, Nigeria as a whole still has a lot to do in respect to technology. So, but it's a welcome development. Back in the days, you might not really have HR, outsourced HR, but now outsourced HR is increasing day by day. And it's not just about outsourced HR using paper, but now we are having all of these things digitalized and all of that. So with time, I believe that it can be the full reform in respect to digitalization will be achieved. But when that time will be, is what I don't know. I don't know if I'm able to make justice to, I'm not really sure it's even a question, but a concern. Barrister.
I presume you've been able to do that. I think somebody is asking how the new tax reform will affect the change operators. Do you have like an answer? Somebody is asking how this tax reform will affect the handle change of money. Sorry, Mr. Victor, did you get that question? Mr. Victor?
Hear me? I think my network. Yes? Can you hear me?
I can hear you now. Did you hear the last question I asked?
Yes. I got the question. Okay. Well, if your operations pays payee, it affects you. If your operations remit annual income tax, which they do, yes, it will affect you. If your operations is a big company, because we are going there, we'll just touch up on that. Small company, big companies, we are going to get there. It will affect you. if your company is classified under the companies that ought to pay development levy, what's the name, withholding taxes, VAT, yes, it will affect you. So we will get there. But based on the first one we have talked about, in respect to payee, yes, it affects everybody. In respect to the payee that we have done justice to. So if your organization is registered and you have people you are paying salaries, definitely is going to affect in the sense that it will change the approach to which your payee was being calculated into, so that to comply with the new calculation, with the new reform. I don't know if I am able to answer that.
Okay. I think we'll take the other questions at the end of the session. So I would like us to go into the last, that's the company income tax, development levy, and the rest, so that we can round up and then take all the questions before finally bring the session to a close.
Okay, I can see a question here saying regarding the business name. I'm not sure we've attended to this. Okay. So regarding the business name and limited liability company conversation, there's been the urgency for business name owners to switch to LLC. Some others are saying they should retain their business name, saying it serves them better. What really is the direction for business name / enterprise to switch or no? What are the blah, 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 blah. Okay, I think in the next section, I'm going to talk about the small businesses and the big businesses. But if you really want a yes or no answer right now, there is no need to switch anything. By the time we get there, you will see. What will happen to individuals who use savings account as a part of their business? Your business account, go and use your, have a corporate account to attend to that. Okay, so quickly, let's just continue. We'll continue from there. So this is where business owners are really going to find interesting. Okay, so company income tax. So what are the things that are exempted that will not be taxed, that will not be subjected to tax? So for the people asking the question, should I switch? Should I not switch? This is what the law has said. What the law is saying for 2026. Small companies, before, small companies was categorized to a turnover of 25 million naira in a year. But now the government is saying small companies is any company that is doing 100 million naira revenue. So if your revenue, that's your turnover. If your turnover is 100 million naira and above, you will pay company income tax. But if you are doing less than this 100 million, you will not pay any tax. So you can now ask yourself, do you want to switch from business name to private limited liability company? The choice is yours. It makes no difference if I will answer you directly. So if your fixed asset is not more than 250 million naira, you will be paying zero tax. But I need to say this: you will pay fine if you don't file your annual returns. Even if you are not meant to pay any tax, if you are on 0%, but you fail to file your returns, your annual returns, you will pay a fine, and that fine is, I think, is 100,000 naira. It has been increased to 100,000 naira. So that's on that. Now we also, I think that's what many people want to hear. So other things that the government also mentioned are the eligible labeled startups that they are exempted from paying tax. So when you talk about the labeled startups, you are talking about, definitely we are saying that you must be registered. It must be a registered business, and then your business operation must be recognized. In fact, preferably you are into IT. So those are part of the, and again, we also, your business also should be a business that is pushing technology, or you have technological products or processes. So those are the labeled startups that will be exempted from paying taxes at all. So we also have compensation relief, or 50% additional deduction for salary increases. When you increase your staff salaries, you are paying them a certain incentive like transport subsidies and all of that. There is an additional, for that addition, you can enjoy 50% relief on that payment. However, if you are not even up to 100 million, if your business is not doing up to 100 million, you don't even need to stress yourself. So all these ones are majorly for businesses doing above 100 million. So those are the ones that needs to be thinking of, okay, how can we enjoy one or two relief, employment reliefs, compensation relief. So this employment relief now is 50% deduction for salaries of new employees hired and retained for at least 3 years. So the government must have seen the name of that employee for 3 years consistently, and can prove it that yes, these people are still in the system. So there's a 50% deduction in terms of relief that can be enjoyed for companies that are doing above 100 million. Now, right from time, we all know that agricultural business has always been enjoying one form of incentives or relief right from time, and this is just to encourage farmers, to do more, so that we will not we will not go hungry. So for agricultural businesses, for the first 5 years, is a tax holiday for them. They can enjoy, but that does not mean that they will not file returns. I keep saying that all businesses, one of the reasons why the returns is very important is for record keeping. It's also for data analysis by the government. The government also wants to know how many small businesses they have compared to the big businesses and all of that. But that does not mean that we don't have a responsibility to do. So you still need to pay your tax consultant, you still need to pay your accountants, your financial accountant consultants and all of that, your accountants, in-house accountants, so that we don't feel that, so now that I'm not paying tax, I don't need to do all of these things again. Penalties will be knocking at your door if that's been done. So the minimum tax has been abolished. The 1% tax then. Back then, it used to be 1%. It has been abolished. A global minimum tax rate of 15% for multinational capital gain tax for companies has increased from 10% to 30%. So this is good news for big companies, the big guns. So all their capital gain investment and activities, they will only pay 30%. Sorry about that. Okay, and then for the development levy, small companies are exempted from paying development levy. However, for the big companies, it's now going to be, before it used to be 1%. So, but now it's going to be 4%. However, the tertiary education tax fund, there is always I think that was 0.50, if I am not, if I can still remember clearly now, 0.50 or this thing, or maybe 1.25 in between. Back then, where they used to calculate they used to take out all those charges when you are doing your company income tax computation. But now, all those things have been scrapped, or should I say all of it has been encompassed into the development levy of 4%. So there is more to enjoy. But in respect to VAT, so let me just quickly take this because of our time. In respect to VAT, the federal government is more interested in VAT and withholding tax than company income tax. This is what I have observed since last year, the beginning of last year. So I observed that. So I was not surprised with this new reform. So I observed that the federal government, and I can't blame them, you know, by the time back in the days, the concentration was more on company income tax, and from 2 years down, 2 to 3 years down the line, I observed that focus has been more on VAT, value added tax, and withholding tax. Why? Because the revenue organizations, the revenue federal government is going to generate from this is far higher than what people remit in terms of company income tax. So I have experienced that. I have done a series of VAT and withholding tax audits, and I think I have like 2 or 3 clients that we've done their VAT and withholding tax audit, but they did not bother to come for company income tax audit. So imagine they did for 2023, 2024, and they didn't bother. They didn't bother to come and do company income tax audit. In fact, before it used to be company income tax audits that everything is always encompassed, but now they are well focused. Why? Because if the services you offer is VATable, and you do, let's say, 5 million in a month, what the federal government does, they just carry their calculator, do 7.5% multiplied by 7.5% multiplied by the 10 million. That amount of money is what they are expecting you to pay to their account. So if you now have, because what you have sold is what we understand to be your VAT output. So the company, the federal government is expecting you to come and remit that output amount to them. But if whatever you have imputed to get that output has been subject to VAT, it is expected of you to deduct it from the input. So that's where we have VAT output minus your VAT input equals your VAT payable. So when they come for the tax audit, they want to see all the analysis. So your VAT input are your purchases in respect to the sales, direct expenses to the sales. For example, if you are into if you're into any business that is maybe you are into lounge business and all of that, and then the things you buy to be able to produce what you sell are what qualifies under the VAT VAT input, the purchases, those direct purchases. In accounting, we used to classify that as your cost of sales. However, it is not all it's not everything that qualifies. It is only the material that really qualifies under your VAT purchases, your purchases that will be subjected to your VAT input. So if these items by the time you purchase, if VAT was not calculated on those items, you will not be able to claim VAT input on it. It is only when VAT is written on that whether invoice or receipt or anything, that is when the government will recognize it that truly you have suffered, the business has suffered VAT inputs, VAT purchases at the point where they were buying the material. So when they are selling, it will be recognized, that is, they will deduct it from what you eventually sell. Now, for a VATable company, and you are not, for a VATable company, because I've seen instances where people ask that, we know that you're supposed to be deducting VAT, but I'm not collecting VAT from people. That's even the bigger offense. So because every company is assumed to represent the federal government. That is, we are supposed to act as agencies to the federal government in respect to VAT now, to collect VAT from the final consumers. So if you are not even charging VAT to the people you are selling to, you are it's punishable by law. So what are the items that we all know these things right from time? The things that are subject to the things that are exempted from VAT. That is the items that you will not pay VAT on. When it comes to basic food item, your gari, rice, raw food, not the Chicken Republic one. No, the Chicken Republic said you are paying more tax on it because you, especially if you go to lounges, you will pay consumption tax, you will pay VAT, and for some lounges you even still pay service charge. So we are not talking, because those ones are considered luxuries. So, but for raw food, you will not pay VAT. It's 0%. Rent, you will not pay VAT. Educational material, you will not pay. Health, if you are in the health sector, medical service, you will not pay VAT. However, you will still be filing nil. You'll be filing nil. If you don't file nil, there is a penalty. I think there is a 50,000 naira penalty for that. As at last year, I know 50,000 naira because I know I know someone who paid. So pharmaceutical products still in line with medical. Small companies that has 100 million below turnover. This is the new news now. Small companies. So this is one of the good news. Small companies that has 100 million naira, 100 million, lesser than 100 million turnover, are exempt from charging VAT. I'll take that again. Small company, lower than 100 million naira turnover, are exempted from charging VAT. So this is the good news. Unlike before, that everybody pays VAT. So I think this is one of the things we are looking forward to see. Refund on VAT on assets and overhead, produce vatable, refund of VAT on assets and overheads to produce vatable products or services are also not meant to suffer VAT. So agricultural input, they have been there right from time. Purchase list, hire of equipment, agri purposes, disability aids, hearing, transport, electric vehicles, humanitarian supplies, baby products. So all those things are you are not meant to charge VAT on it. So the good news in all of this whole big story is that small companies are exempted from charging VAT. So like some of my clients now that are not doing up to 100 million, so now you don't need to charge VAT, but you still need to file that returns. So it's very, very important. Withholding taxes, small companies, small companies, manufacturers, and agri businesses are exempted from withholding taxes. Small companies are exempted from deduction on their payments to suppliers. Now, before, if, for example, let me use salary as an example, as a case study. If salary is contracting someone, a professional or anybody, an individual now, you are meant to deduct 5% for an individual, and for a corporate organization 10%. But now the new reform is saying no need, don't deduct any withholding tax. So that's good news. Stamp duties, on stamp duties, electronic money transfer from 10,000 naira below, there will be no stamp duties, no 5 naira charges, no 10 naira, no 50 naira. But salary payments, no charges, no stamp duty charge on salary payment, interbank transfers of government securities or shares, blah blah, or all those stocks, no stamp duties. But I still get, but I get 50 naira stamp duties on transactions up to 10,000 and above on my accounts. So, but anything below 10,000 naira, you will not get 50 naira stamp duty charge. So I believe that many of us experience this 10,000 naira. But what the law is not saying is that for interbank transfers, there will be no stamp duty charge. So you can transfer money from your Access Bank to your GT Bank, from your GT Bank to your Zenith, as long as it is one business. And when you are paying salaries to your employees, now the government is saying that there will be no more stamp duties charge that will be subjected to that. So that will be all. Please, let's not forget that it is important to file your returns, even if you are on zero. If you are on zero rated VAT, zero rated tax, it is important to file the returns, or else there will be penalties. And with addition to penalties, it always comes with the fines and it always comes with interest, additional interest, and all of that. So I think that will be all on that. So we just take questions. Oh God, we just take questions now.
There are a lot of questions.
Sorry, Mr. Somebody said up to 50 million of what? I missed that, please.
So I think there was a time you were mentioning, I'm trying to remember the section. You had then started talking about the company's income tax. I think you were mentioning how the tax would be higher once you pass 20 million in the new tax regime. So once your money passes 20 million and above, up to 50 million and above, you will pay more tax with the new tax rate than with the old tax rate. I think that's what you're trying to explain.
So what I remember saying is that back then, smaller companies were like 25 million. So, but now it is 100 million. That is for company income tax. That's for companies. But for personal income taxes, I'm saying that from 20 million and above, that's when you begin to feel the heat of the new tax band for personal income tax. That's payee.
No problem. So there are a lot of questions. I know you have access to the question and answer section. So because of our time, I think we're already past the time allotted for this. Within 5 to 10 minutes, could you go through the questions and see the ones that need the most urgent of answers? There are a lot of questions here, especially regarding businesses and handling their taxes.
Okay, I'm trying to look at the questions. I hope I'm not skipping anything. So, okay, someone here is saying, I understand that an individual who earns both a salary and income from a private business is required to file a combined tax assessment reflecting all earnings. Could you provide further clarification on this? The first thing is who is paying that salary? So who is paying that salary, because this is not really clear to who earns both a salary and income
from a private business. So the business is meant to pay your salary. So the business will be the one to file the returns of the salary they have paid to his employees. So it means they are seeing you as an employee. Then the business files payee. So the business is responsible for that one, not you as an individual to file returns of salary. It is the company that is doing that. While for income, so if you are also a business owner and you are generating income from that business, you are actually, that's let's say director's remuneration or whatever you call it. You are meant to, there's something we call self-assessment for business owners. So you have to declare what your income is for the year. So sometimes they might request for your bank statements, which I know a lot of people don't really used to comply. So, but sometimes but the normal thing is to request for your bank statements. They assess you, and if you don't present yourself for assessment and all of that, they might give you best of judgment assessment, BOJA, and you want that. So I hope that addresses this person's question. So in respect to salary, it is the business that is doing that. But in respect to the income you are generating from your business, you will be assessed to tax as a business owner, self-assessment. So the next question here is saying, what evidence are we to provide to our companies as evidence that we pay rent? Your rent receipts. Thank you so much. What is the revenue threshold for small companies? 100 million. I've mentioned that. 100 million and 250 million. Below 250 million fixed assets. Yes?
That question, I think, is talking about employees trying to show that they pay rent to their employers. Because I'm sure there are some people that pay rent and don't get receipts. Like the parents in their own private houses, but they don't get receipts or something.
It is very simple. It is very simple. Ask your landlord for receipt. I don't even think any landlord, you stay in any house that you are not getting receipts.
Actually,
get receipt for your landlord. It's very simple. So, what is the threshold of 10 million? How will benefits in kind be handled in the new NTA? NTA is broad. So when we use the word NTA, it really gives me. So under the personal income tax, benefit in kind, there is nothing like benefit. The benefit in kind back then we have been consolidated into the CRA, the release, because the CRA back then was housing and transport allowance and all of those things. So, however, there is a new in this new policy. There's something about maybe when the company gives you a car to use, those are like another new examples of kinds. So there's a 5% on the worth of the value of the car that will be subjected to tax. So and also, do you think the benefits in kind in terms of providing accommodation for staff won't take rent relief? How about using the value of benefit in kind as the rent amounting for computing rent relief? Okay, I just got this full question. Would that be possible? We shall see in 2026. We shall see in 2026. But from the top of my head, I want to say maybe I don't think it's possible. But it's something that we can always give a try. The next question here is saying, can you elaborate on penalties of delayed payee remittances, and are there modalities / relief, especially in the times of economic uncertainties, if the employer is unable to meet the monthly obligation? One, if the company is not paying salary that's a different case on its own. If the company is not paying salary, definitely there is no payee because you are having difficult time, and of which you will have discussed with your employees and have agreement and all of that. So definitely that month you are remitting zero, but by the time you are paying your staff, whenever you are paying them, you are also deducting the payee on that. So for delay payee remittances, on the 10th of every new month is the deadline for making your remittances. So if you delay in doing that, especially when you are using a software to file your returns, there is a penalty for that. Unless I come back to what the penalty is right now, but there is a penalty for that. Just to let you know. Somebody saying, can you share your slides? I've been sharing my slides since. Or wait, have you not been seeing the slides?
The person meant after the event, like after the session, would it be possible for them to get the slides? I think we will just speak with Mish and just know how we organize that after the event. For those
Okay.
that like notes.
Okay, okay. All right. As a small business scale owner with a registered brand under the CSC using a personal account for business, how will the new tax reform affect if the annual gross income is about 2 million? I think I've already done justice to this. Just do on the norms, your personal account should not be used for business accounts. Just separate it. You are safe. Your file returns. Okay, there's a question here from Kabir. It says, is it Kabir or Gabriel? It says, I work as a consultant supporting individuals and SMEs, and I'm planning to formally register my business with CAC in 2026. In light of the new Tax Act 2025 starting off in 2026, would you advise registering as a business name or a private limited liability company? I think I've talked about this. If I register as a limited liability company and pay myself this monthly salary as employee, will my salary still be subject to personal income tax? If I pay myself a salary, it is personal income tax that we are all talking about in respect to this salary. So this salary that you are paying yourself would have been subjected to your payee, the pay as you earn. So now, if the company now wants to, if the government now wants to assess you as the business owner, okay, let me talk a little more about this. I remember then one of my clients that used to have this issue. So back then, we were not paying her. She was not paying herself salaries. So the government was always using self-assessment and all of that. So back then, so at the end of the year, by the time she's filing her returns by March, and they will say, okay, bring this amount, bring this, bring that. One of the things we were able to do for her then was to tell her that, okay, you know what, be paying yourself a salary every month. So that every month that you are paying your salary, you will be remitting a payee. So you will be remitting payee on your tax identification number. So it's like you're already making remittances monthly. So by the time, at the end of the year, the government will still come and assess you to tax. That's self-assessment for business owners. So all the money you have paid, you've paid yourself. Let's say you paid yourself to 200,000 from January to December. By the time you are doing your self-assessment, you can put that total amount of money as the income you earn. And we used to pay another tax. No, by the time this is the money you have earned in the course of the year, based on the salary you are paying yourself from your business, and they can see the track record of the payee returns that you have filed for that period. So there will be no additional tax, unless when the government is saying no, the amount you have charged yourself, the self-assessment you have done for yourself is not showing the true reflection of your income. So if they decide to do further assessment with you or without you, and to know, okay, no, you've declared 2 million. fine, it's not 2 million, it's 3 million. If you say no, it's not 3 million, go and bring your bank statements. Do you understand? So that's how actually these tax officials work. So by the time you are unable to provide your bank statement, it becomes an issue that you start dragging. At the end of the day, maybe you fall back to 2.5 million. Remember that you have paid something up to, you have paid a returns on like 2 million in the course of the year. So the additional payments you'll be making will be on that 500,000. That's if you are actually earning more than the 2 million. But if you are very sure of yourself that you are not any more than that 2 million, you drop your bank details, and then there's no cost to pay any additional tax. So I think that that has done justice to that. Please, how does? Oh God. Okay, I think we are almost done. Please, how does this new tax act affect a company that is not limited liability company? I mean, a registered business with ordinary is still the same thing. You are not ordinary. You are not, if your business is registered with CAC, you are not ordinary. Business name or not, you are not ordinary. Just file returns. So kindly clarify, is it account turnover of 100 million naira or profit? No, not profit. Oh, sales of 100 million naira. That's all. I can't see the slide for stamp duties. Mr. Victor, you shared them with the slides. As a company with high turnover, 2 to 4 billion, but not as high profit, you will pay tax. Don't worry, you pay company income tax. 2 billion, you will definitely pay. There's nothing. It has nothing to do with the profits here. We are not talking about profit. We're talking about the turnover. From 101 million.
Asking how they can reduce the tax they will pay.
You do that. You do that through your company income tax. That's why I said earlier that you see that the federal government is not really chasing company income tax. I'm not saying they are not particular about company income tax, but their focus is strongly on VAT and withholding taxes. Before now, I'm talking before now. So because they know that a company can make 1 billion naira sales, and the net profit will not be more than 100,000 naira. By the time they have deducted all manner of expenses and everything. So the government will also definitely still going to review all the expenses. There are some expenses that are allowable, and there are some that are not allowable. So the government will also review your audited financial statement. And so by the time your accountant or your consultant is calculating your company income tax, is doing your company income tax computation, all those things would come in. There is something we call loss reliefs when you make loss in the previous year, and all of those things. The company, for tax purposes, the depreciation you have deducted will be added back. But there is something we also call what's the name? The name just disappeared now. The government used in replacing the depreciation, capital allowance. So that is used in replacing depreciation. So all of those things will come into place, and then you will see if you have a taxable income as a company at that point or not. So that's not an issue. How about business names and the prices? What are they allowed to deduct? I don't understand this question. What are they allowed to deduct? Asal. Thank you. I am a bit confused about the revenue threshold for small companies. It's 100 million because the NTA Gazette says 100 million. You can check. It's 100 million. I didn't start the presentation with you. Please, can you have a slide? Can we have a slide or recorded version? All right, that will be end of the. Oh, good. Thank you very much, Mr.
Thank you very much, Mr. Victor. I think a message just dropped in the question. I mean, expenses.
I don't think we can take anymore.
So I'll be inviting Mr. Michel to give one or two talks on the product.
All right. Thank you, Victor. Thank you very much. You've done justice to this. I believe everyone benefited from this session, but it's an interesting session and it affects every one of us, both business owners and employees, right? So it's an important session. So at the end of the session, everyone will be getting, you will receive a notification. Let's say in less than 5 minutes with the recorded version, you can go through it. If you joined at the middle of the session, you can always watch the recorded version of the video and grab some of the important things we discussed about. And also, everyone will also get the presentation slide. It will be sent to everyone's email that attended this particular session, right? So once more, we want to really thank everyone. So it's even past 1 hour. The session was quite interesting, and at least all the questions that everyone asked, at least we were able to touch a lot of questions here. So back to the reason why this webinar was hosted is to enlighten every one of us around taxation against next year. And as you all know, this particular webinar was put together by Salario. Salario Technology Limited is a workforce management platform that enables businesses to manage their payroll and HR processes. So all the calculations that Victor presented, both around the payee, is something that we automate. So you don't have to worry about computing it or juggling Excel sheets. So our platform helps you compute your payee and make sure that it's accurate so that you would not make mistakes on it, because Nigeria uses a progressive tax table. So sometimes people can get confused about it, and that's why it's good to use platforms that help you automate the entire process. So if you're interested to see how that works, we'll also send an email to everyone. You can book a demo as well. We can give you a walkthrough of how the product works end to end within the week. You can always pick a time that fits into your schedule and schedule a demo with us, and we can walk you through it. And also, our system is also compatible with the new tax law as well. We already have it in place. So by the end of this year, the system automatically switched to the new tax regime, and that is what will apply to many businesses. So those who are already on our platform might be asking, "Oh, how would it also have apply to us?" So there will be a recomputation. So once you log in, you would get a prompt to trigger a recomputation of all your employees' payee, and also important that as an employee here, that you get a proof or an evidence of your annual rent, because that will also be uploaded on the portal, and also you have to provide the annual rent that you pay. So those are some of the things that we already put in place, and it will apply to all the business on our platform and those who want to also join the platform against next year. It will also apply to every one of us. So we try as much as we can to stay compliant and ensure that we relieve the stress from business owners so that we can focus on growing our business and not worry so much about tax remittances, computations, and the rest of them. For employees, we make it easy for you to also access information you need, like the pay slips and all that, and also makes the entire process streamlined. And you see the tax you're paying, and everything is very, very clear and transparent. And you know that you're actually getting your tax is being paid. There's some businesses that deduct tax and they don't actually remit that tax. So on our own system, we notify employees as well that your tax has been remitted, immediately has been processed. So you are sure that your tax is being remitted, so that you yourself will not be found wanting as well. So at this point, I think we'll come to the conclusion of this particular session. Yeah, Victor, right to you.
Thank you very much, everyone. I think we round up here and say thank you for showing up. Once again, my name is Victor Akindolani. Do enjoy the rest of your day.